Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, October 29, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, by the end of the day, the market once again didn't get very far. She's riding the 20-period moving average. And we know a couple of things. Above all the moving averages, the trend is in fact your friend. However, there's always a, but wait, there's more. Mrs. Market ran a really important test of a really important place today. And what I can tell you from an inside the number member and live room member perspective, we were, as they say in the trading parlance, all over it. What exactly was that test? Let me explain, Lucy. Right of the vertical is today's activity. The horizontal trend line that you see running across the bottom of the screen from lower left toward upper right is in fact the trend line I'm talking about, and we're going to look from where it came from in a moment. But what you'll see is, and this was on the board really early this morning, and this is what traders in the live room were looking at. They were looking at this trend line saying, hey, if price comes into this trend line, along with a couple of other reasons why that's an important area of support, we should get a bounce back in the upward or northern direction from that trend line. Where did it come from? Here's a daily chart. You could see here is point A. Then you have point B. That creates the trend line. We don't create the trend line. Mrs. Market creates the trend line by making those 2 points. We know that staying above the trend line will be in the bullish stance. Getting below will be in the bearish stance when just speaking about the trend line and the trend line only. That's what it looked like on an hourly chart. Here's the first hour candle. Nice ricochet away from it. 30-minute chart, nice tail, nice reversal off that trend line. 15-minute chart, bounced right back away from it. 5-minute chart took about 10 or so minutes to test and get out of there, meaning out of there being the trend line. Here it is, 9:15, but wait, there's more. We have an area of support. We had some numbers up there, but we have a trend line that comes in around 579. It was actually just a spike of 579, which is also around the gap left open Friday. So that's something else we have in the same area. And then we have the flip side, which is the gap left open yesterday on the northern side. And then if she gets above the gap, we have 582.40. So first, let's check out the 579. It actually worked out to be 578.80, give or take. There's a blue line of support. There's the trend line. They cross. You see what happens when price spiked them both. She went right back up in the other direction. That's called a test and recovery. Just saying for the record that all this stuff was up on the board at 9:15 in the morning before the markets open for business. Pause the video, read the notes, go back to the chart and double check the work. We didn't have to worry about getting below 578.75 on candle closes. That was off the table. They bounced back in the other direction. There's your test of the trend line and bounce back above the trend line. Funny how that works. You see that at 9:42. Call 580 a bogey above, and she is in no man's land where the gap above at around 580.77 becomes the next target. 580 was an early bogey. That's 15 minutes into the trading day. What happened once she got above 580? That was it. 580 was the bogey. Once she got above, never visited it again. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. It was all in here before the bell even rang. Think about the big picture. We identified an area of support that they were running a test of. It had to do with a gap left open from Friday, so the gap was 579.02. And the trend line was just a little bit lower, creating a zone of support. Spiked the zone and ripped it back up in the other direction. It pays to know your numbers. Do you think you can utilize these numbers during the trading day to your advantage to make money? Well, why don't you find out? Let's take a look at another example from our market chart, if you will, CL. The support number one was $67.35 in CL. That's crude oil. 67.35. Here's a 5-minute chart of crude oil. Right of the vertical is today's activity. So here's right of the vertical. And you can see, bounced off of it. First time, best time. Gave you a bounce up to a high of 67.87. For argument's sake, in the crude complex, that's $500 a contract. And as you can see, once you got below, it becomes resistance. The numbers are called important numbers. They are support when price is above. They become resistance when price is below. They're important numbers. Write that down. Put it on a sticky note. Let's check out another one from the list of markets we cover. How about 220, support number one in Camp IWM. 15-minute chart, right of the vertical is today's activity. The blue line is on the dot at what? 220. Came into it in the morning session, first thing in the morning, bounced off of it, never looked back. That was support number one today. These are on the board each and every day. They are morning fresh each and every day in terms of the numbers. Provided for members of Inside the Numbers and the Live Room each and every morning. Speaking of Camp IWM, we might as well cover that market. My favorite market leading indicator, the Russell 2000 or small cap space. What does she have going here? She's got a bearish wedge situation. Now, she can certainly break the chain and start running higher toward the higher end of this breakdown candle. That is certainly possible. But at present, we have what's called a bearish, flaggish, wedgish situation, ISH in italics. What we do know is, above all the moving averages, the trend is your friend. That's the dominant thing. Obviously, or maybe not obvious, but it is obvious to me since I look at it every day. The weekly chart, above all the moving averages, comfortably, the trend is up, but we do have what we keep talking about every single night. We got a big time breakdown candle, and she's yet to close above the high of that breakdown candle. Until that happens, this is essentially a bearish, wedgish situation, ISH. Daily chart, breaking the chain, is above yesterday's high, 222.97. We'll round it up to 223. She begins to start climbing the breakdown candle up toward 225. No change since the analysis yesterday. What about the folks down at the transportation department? Same routine, above all the moving averages. Trend is your friend. Up 18 points today, 0.1 of 1%. That's a rounding error. It's basically flat on the day. You check out the weekly chart, comfortably in an uptrend. The trend is, in fact, your friend until it's over. We have an election in a week. We have a plethora of earnings. It's not out of the question to continue making new highs between now and the election period of time in a week. We've got a chunk of the Mag 7 reporting. I believe Google reports after the close today. Probably some more that are slipping my mind. We'll find out in the morning what we've got on the move. What about the Q people? No change since yesterday. They were up 1% today. But all in all, there's no real material change from yesterday. Same routine. I know it sounds like a broken record. Above all the moving averages, the trend is in fact your friend. From a bigger picture perspective, trying to challenge the former high made back in July of this year. That's essentially all they're doing. While they're above all the moving averages, this back and forth stuff is just daily noise, as they say in the trading parlance. We had the XLF down 29 cents today. Any material change there? Down about 0.6%. Nope. Same routine. Comfortably above all the moving averages. Trend is your friend. There's no material change on the chart. We did, however, have a little material change in the SMH, or smash mouth, up almost $6 today, or over 2%. So we've been talking about this big time down day, $14 down day. And she's eating time off the clock in this bearish, flaggish, wedgish formation, whatever it is, some kind of sloppy-ish formation. Now, here's a big time up day, 2.27%. Is she going to run a test of the high of this breakdown candle around 261, 262, and is she going to bust through? That would be a wildly bullish sign for another leg higher across the board, across the markets. We're watching the smash mouth, the semi-space, very, very closely. It's a canary in the coal mine for the tech space. Now, I want to get back to something just a little more broad before we wrap things up today. Here's a weekly chart of the SPY. They're comfortably in an uptrend. There's nothing wrong with this chart. She'll turn from somewhere, but certainly at present, there's nothing wrong with this chart. Qs have yet to make a new high, but once again, there's nothing wrong with this chart. She's firmly in an uptrend. So the stock market's doing fine. Bitcoin is at about 72,000 today. Bitcoin doing fine. This is a long-standing, bullish, flaggish type of situation. You can see it on the monthly chart. We've looked at this before from a monthly perspective. So they were eating time off the clock, getting ready to bust through the former highs or stay above the former highs. That's kind of where we are now. So we've got a rise in Bitcoin. So the general consensus is money is running into Bitcoin because they think that that's either a speculative investment or a safe haven or a hedge against the dollar or something like that. So we have stock market all-time highs or near all-time highs. We have Bitcoin all-time highs, near all-time highs. And we also have gold all-time high, $2,800. So how do you reconcile all this? Gold screaming higher, Bitcoin screaming higher, the stock market screaming, not necessarily screaming, but the stock market at basically all-time highs. Doesn't something have to give? Is it going to give after the election? Is this saying with gold and Bitcoin futures, is this saying that we're going to get more inflation any way that you slice it or dice it, no matter who wins the election, whether it's Trump or Harris? What difference does it make? They're all going to spend money into oblivion. Is that what that's saying? Is it saying that the dollar is going to be disconnected from being the world's reserve currency at some point in the near future? Is that what all this is saying? Not necessarily the stock market at present saying that, but that could be interpreted from the gold market, the Bitcoin market, and so on. Just wanted to bring these things up for discussion. What are your thoughts? Post a comment under the video. What do you think the reasons are that everything's screaming higher and you have no divergences and all this stuff that's supposed to be safe haven-ish? Where's the safe haven? What is the safe haven for? Just food for thought. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.